Hello, everyone out there in the digital world. I hope you're enjoying the conference. And without further ado, I'd like to introduce to you the final panel of this year's Las Vegas Property Development and Infrastructure Digital Conference. These guys are awesome guys. I know them all pretty well. They've been in development and acquisition and disposition of industrial real estate for many years, and certainly rock stars of the industrial real estate market in Las Vegas for sure. Starting with Tyler Mattox. Hey, Tyler. Principal of MCA Realty. Tom Betten. Hey, Tom. Vice President of Strategic Partnerships for Matter Real Estate Group. Hey, Tom. And last but not least, Dan Doherty. Hey, Dan, Executive Vice President of the Industrial Group for Colliers International. Welcome, guys.
Thank you.
Welcome.
So hope you're all doing well. Let's get started. We'll get right to it. I've got an opening question for you that I'd like each one of you guys to answer. The same question, a little bit about what you and your company are doing, your key industrial projects here in Southern Nevada, and what do you see the current state? I know this is a big question, but we're going to start with a bang. What do you think the current state is of the industrial market in Southern Nevada as a whole?
So we have a team of 7 professionals here at Colliers. I've personally been in the business 31 years, 21 at Colliers, just about 22, and 10 at CB. And so all I've ever done is industrial, and we it's a relatively small market at 142 million square feet. So every industrial broker in town does kind of everything within the food group, us included. So we sell development sites, we help developers design projects, we do the leasing, we sell the leased investments when they're full, or before the shutdown, we were selling them 100% vacant. We do tenant rep, we do land sales, we do user sales of buildings as well as land. Pretty much anything under the industrial umbrella we handle. We also have 14 people in the industrial department here at Colliers. So pretty sizable organization at 48 producers. The state of the market, I'm on a NAIOP panel tomorrow morning, and I was told you're not allowed to use the term a tale of two cities. But I'm certainly going to use it today because it's exactly what it is. If you take a look at the our second quarter report that just came out, and you ignore the anecdotal text, it's a very positive situation. We're in at 4.5% vacancy. Very strong net absorption at just over 2 million square feet for the second quarter alone, 3.3 million square feet year to date, and 2.6 million square feet of completions year to date. Compare that with this time last year in 2019, where we absorbed 2.9 million square feet compared to 3.3 this year. And we delivered 2.8 through the second quarter compared with 2.6 this year. So we're actually healthier today than we were 12 months ago. However, we all know that things are happening behind the scenes. And I've heard a few comments from people in town saying the market's really healthy, most product types are doing well, and a year from now we might not even know that this virus existed. Now that comment was specific to industrial real estate, so not anything on the health side. But I almost couldn't disagree more with that comment, because the things we're seeing behind the scenes, which we'll get to in much greater detail as this 50-minute panel goes on, are creating a really bad situation for the next several quarters. Now, what could happen to alter that? Another 2 million square feet of absorption next quarter, another 1.5 million to 2 million square feet in the fourth quarter. So if the big boxes keep coming here, the market's going to appear extremely healthy and remain a low vacancy, but a lot of the product types right now are not faring well. So 4 of our 8 submarkets suffered negative net absorption in the second quarter of this year. So it's kind of area specific and product specific with regard to the health of the market.
For Matter Real Estate, we have about either recently completed or under construction, a bit over 1 million square feet in Southern Nevada. We've got a big project in North Las Vegas of about 750,000 feet, and one in West Henderson, recently completed about 300,000 feet. And then last year we completed the first for sale airspace condo industrial project in the Southwest that we're almost sold out of. So we have an interesting cross section of industrial for sale, some bigger industrial boxes in North Las Vegas, all the way to what we call, incubator space in West Henderson, along with some, mid-bay distribution. So we have of the industrial products, we have a lot of the same, a lot of different diversity within that. And so we have a decent look at the demand, not as close to it as Dan. I was a broker in industrial broker in Las Vegas. I was born and raised in Las Vegas, proud UNLV grad, and got in the business right thereafter. Live in San Diego today, but travel out there quite a bit, keeping an eye on our assets and continuing to lease them. Obviously, we're all a bit nervous or anxious with COVID and how it impacted demand. Glad we're not in the retail business, of course, but we also, I'm going to say, we're probably can't see the rest of the iceberg that Dan sees, but we've been, I guess I'll say pleasantly surprised with the activity through the pandemic. We'll see if how the story ends, but so far we've seen a slowdown, but again, fairly surprised in a good way that there continues to be tours, activity, calls, and leases being signed.
Yeah, I agree with you. I think I've been pleasantly surprised as well with my group and our portfolio. We've had a lot of leasing activity that's continued. Now, I don't know about transactions. Dan might be able to speak more to that, but on the leasing side, what do you agree with that, Dan? I mean, have you seen pretty steady, or has it dropped off?
3 months ago, it appeared like it was dropping off. That was the only week I stayed home when I was starting to think that the world was going to end. And in our office, thankfully, never closed. So after about a week, we got back in here, and we've kind of been here every day since. And the activity picked up again pretty quick. And what's more surprising is that we're seeing activity in all product types. Probably the only thing that really fell off right now is investment sales. We closed 2 deals since this pandemic started. The city has closed 2 deals since the pandemic started. I have an exchange buyer under contract on a small building, $3 million, and there's a few more exchange deals. So those are kind of have-to deals. And on the investment side, you're also seeing a lot of groups kind of stockpile money right now to see if the value add buys pick up. But on the leasing side, very active. I talked about the first and second quarter absorption, very strong. But again, 4 of the 8 submarkets did post negative net absorption for the quarter.
All right, Tyler Mattox is on deck. Tell us about your projects in Vegas and how you think the real estate or the industrial real estate market's doing overall.
We don't really have key projects per se. The last project we bought in Vegas was last summer, and we're not like Tom in the development business really. We're not in Vegas. We are. I think I feel the market from an investment perspective is kind of in a state of limbo. I feel like there's the capital markets for value-add real estate, which is the space that we're in, are still in a state of flux, and so debt's being priced at wider spreads than it historically has been, and it's being priced at lower leverage than it historically has been. And so I think right now there hasn't been much activity. I mean, we've made 1 offer since this began on a project that ultimately didn't get a response. And so I think the buyers and sellers, the gap between buyers and sellers' expectations is pretty pronounced. And I think it's largely a reflection of people not having really clarity on what's going to happen to vacancy and what's going to happen to rents. And so, to Dan's point, you know, his sort of tale of two cities, I think that holds true for the disparities between our product, which is largely mom and pop tenants or, you know, regional outposts of larger tenants, has been, I think, much more adversely affected than the larger, you know, national and regional distributors. And I think that's, and I have some stats that I can go through that we looked up prior to this, but, you know, in a later question, but I think we've seen a fair amount of stress in our portfolio, and it's been unique because most of the stress has occurred on our projects that are adjacent to the Strip, kind of the Southwest and Strip adjacent projects, and not in North Las Vegas, where we also have a fair amount. And that is, you know, ironic because I think the credit quality overall and generally the sophistication level of the tenants down that are kind of more Strip-centric, resort corridor, convention services tenants, historically they've been kind of a slightly higher caliber, but I think because of the complete cessation of activity in the convention services business and the complete reduction in Strip activity, those guys felt the pain quick, they felt it early, and they felt it deep. And so, you know, I think the recovery of that segment is going to be wholly contingent upon the conventions business restarting and the hotels being able to get back to some semblance of normalcy.
Let's talk a little bit about where you see rental rates going. I mean, you know, you have, you know, I don't know how collections are going, and obviously, you know, with COVID, you know, we're all hoping that vacancies won't grow as well. So why don't we, you know, tell us a little bit about when you're saying that some of your tenants that support the Strip and obviously tourism, the convention business, which has come to a screeching halt, has affected a lot of your tenant base, more specifically, Tyler, and you know, tell us how many of, you know, like give us some percentages on what you're seeing as far as what your rent collections are like, and how many of them do you think are not going to make it or are not making it?
So I actually looked a lot of this up prior to this, and so for frame of reference, our portfolio in Vegas today is 15 projects and about 1 million square feet. I forgot that we have a little over 300 tenants, so obviously very granular. From April to, I guess today, but call it end of June to today, we've lost 52,000 square feet of tenants, so about 5.3% of our tenant base. Either through they just handed back the keys, or we've locked out, which we were able to start doing July 5th or 6th or whatever the time frame was. So 5.3% of our tenant base we've lost. We have another about 100,000 square foot of tenants that are on a payment plan of some sort. So either we've amended the lease formally and deferred rent, in some cases forgiven rent in exchange for extensions. And in a lot of cases, we've just accepted half rent and we've kept it on the tenant's ledger with sort of a pledge to agree to some sort of repayment schedule in the future. And so that's another 10% of our tenants. Vacancy from Dan's report that we got today in the incubator space is about 6%. That's up 100 basis points from last quarter at 5%. So trying to draw some conclusions from all this, you know, if our experience is indicative of the space, and we'd like to think we probably manage our portfolio maybe a little better than the average. So, but just assuming that we're indicative of the space, you know, if we lost 5.3% of our tenants, the vacancy theoretically goes from 6% to 11% by the end of the third quarter. And then if I try to say, okay, if the other 10% of our tenant base that is in some sort of a payment plan, I think it would be optimistic to assume that they all make it. So I'm just going to kind of pick another number. So we may lose another 2% of the tenants to 2 to 3% of our tenants. So from my perspective, it's not that hard to visualize vacancy in the space going from 6% as we sit here today to somewhere in the low teens. And so I think if that happens, or if it happens in some progression, you kind of have to see a softening of rents. I mean, when you're in a low teens vacancy environment versus a low single digits vacancy environment, which we've all been in for the last, call it 5 years, or certainly 4 years, you know, I think you do need tenants have more options, landlords have more desperation, and you know, we all, you know, took economics classes. I mean, it's a supply and demand issue. So we have not seen it. As I'm sitting here today, we really haven't seen it. We have selectively done lower deals on renewals and shorter deals on renewals, where we're just kind of trying to work with tenants and not play, not held the line as much as we might otherwise have. But on new tenants, you know, which there is still decent velocity, surprisingly to me, we've really been able to hold the rent so far. And so, you know, how all this transpires and how long these people can hold out and how many of these guys paid rent as a result of getting PPP funds, which, you know, may or may not be extended, you know, I think we're all still kind of guessing and learning.
Yeah, and you know what? It's interesting because when I look at my management portfolio, and it's very similar. I've got about 2 million square feet of it, and we have about 320 tenants. We've collected 75% of the rents. Our landlords are trying to work with those tenants. We've got like 14 out of 320 that got on payment plans. We've got 15 of them that haven't responded at all that we think or might be gone already, that we're doing 5-day notices now that the moratorium's been lifted. So unfortunately, you know, we may see those vacancies. But, you know, we think we're going to collect the rest of it though. So, you know, and we haven't seen rents go down yet either. Knock on wood, hopefully we stay strong there as landlords and as brokers to help, you know, keep values in industrial real estate. You know, Tom, have you seen any rent reductions, or what is your outlook on rental rates and vacancy and versus this topic? Anything to add?
Yeah. I'll just say that we have future projects that we're evaluating right now, and part of that is developing a pro forma and doing market lease assumptions. And we've ratcheted those down. So we're really, you know, they're typically, I think, you know, on average 3 to 5% rent growth since the GFC. So we took that down to zero on rent growth moving forward, and may have even adjusted it 5 or 10% on the rent side, but we don't see it really moving much more than that. Maybe negligible rent growth, and maybe some erosion of rent, but depending on the product type, you know, between 5 and 10%. But a lot of it, I don't want to downplay the depending on the product type part, because it really comes to, you know, surprise, supply and demand, and there are a lot of tenants out there still looking around. Some of the new construction has been halted or paused. So you really have to start playing chess with what's out there and what tenants are out there. And depending if you line up your rook correctly, you might be able to keep the integrity of your rents. If the competition is not, if it's not really commoditized space, you might be able to do all right.
Yeah, and tenant type and product type is a big deal, right? As far as even though everybody's saying, oh yeah, industrial real estate, it's the strongest and it's going to survive the strongest. But what you're right, when you start looking at the different types that are being impacted by COVID, the shutdown on the Strip, there's going to be negative impact, but then there's also positive impact on others, right? So. For instance, I'd like maybe Dan, you can chime in on like what's your outlook for regional logistic hub for large distribution space centers that are that are already in Southern Nevada and maybe coming to Southern Nevada.
So from a regional logistics standpoint, Vegas still looks attractive. It's possible that Vegas looks more attractive now, because one of the challenges we had, especially with these big fulfillment centers, where we would go on a 500,000 square foot building, we would go from 50 employees to 2,100. when you have these multi-story dense fulfillment centers like Amazon's in North Las Vegas of 855,000 square feet. With a 3.5% unemployment rate 4 months ago, there was a lot of concern, especially in North Las Vegas, especially in the Speedway area where there's so many of these facilities. There was a lot of concern about being able to find enough employees and employees driving from all over the valley to fill up these projects. We've gone from 4% to 33% unemployment in a couple months. And going forward, we know or we hope that unemployment number is going to come down as the Strip continues to hopefully get more dense. And again, hopefully as convention centers start to happen again. But a lot of things haven't changed. Vegas is still a very affordable housing market. When comparing to some of our Western neighbors, power is a big issue for these full HVAC facilities. So it's not so much the cost of power, it's the reliability of power. So if you remember several years ago when California was continuing to have the rolling blackouts, that's disastrous for an Amazon type facility in the summer that might have over 2,000 employees, especially the ones on the third level where they're 45 feet in the air where all the heat sits. Manufacturing's having a slightly bigger appeal here. Inventory is another thing that makes us appear very attractive regionally. So if you own a building or you're building a building, like Tom and Tyler, you don't want everybody to build a bunch of buildings. If you're looking for a regional distribution hub, you want a lot of inventory. And one of the downsides of Vegas in most of my career is whenever we had a tenant come to town looking for 500,000 square feet or greater, all we could show them was site plans. There was no standing inventory that large. The only time buildings that big got built is when they already had a tenant in tow and already had a lease signed. So the fact that we're speccing buildings now, the largest to date has been 731,000 square feet. And Caprock's planning to break ground on a 1 million square footer. That'll be the first 7-digit building built in Vegas if they end up building that, which I'm told they will. And I think they'll be successful with it. So again, area specific, product specific, from a regional hub, I think we can continue to be very competitive. The other thing worth mentioning when you're talking about regional competitiveness is pre-COVID, post-COVID, we're amazed at how many calls we're getting from California companies. The latest of which my partner Paul Sweetland just got 2 weeks ago was from a pretty sizable printing operation, 120,000 square feet, full HVAC. Printing companies have to have climatized space. So the whole space has to be air conditioned, not just for climate or temperature control, but for moisture control. You can't do evaps because the paper gets moist and they run into problems with the ink. So this group, you have to exhaust that air out of the building many times an hour. And the state of California decided that the air coming out of this building had a certain level of particulates in it and that it had to be treated. And so they were going to make them put in this air filtration system that is very expensive. And so I think for this company in particular, that was kind of the last straw. The CFO came out and they're looking at buildings between a partial and a complete corporate move here. So 120,000 feet doesn't move the needle tremendously, but every one of those types of operations, especially when they're not just a distribution center, they not only have higher numbers of employment, but much higher wages. It's substantial for the diversification of Southern Nevada.
Yeah, it's interesting. In yet one of the sessions yesterday, Tucker Morgan, Quora, and I don't know exactly, I don't know if Dan, if you know, but they are in Henderson and they have 700,000 square feet. I'm not sure how much they operate, but it's a distribution center. They picked Las Vegas. They have 260 employees, and they said they're going to grow to 600 to 800 in the near future. And they love it here. They love, the labor force, and I think a lot of other companies are seeing that same opportunity. Do you know anything more about Haas Automation? They're supposed to do 2 million square feet in Henderson as a manufacturing facility. 2,500 people were supposed to be employed out there. Have you heard anything about that? Any of you guys?
So Haas bought 265 acres from the city of Henderson in what we're calling West Henderson, or now I just saw signs that the city of Henderson put up called Henderson West. And we've been working in this area for close to 5 years now. It's gonna do a lot of good things for the state. It's gonna do a lot of good things for the city. Why they needed 260 acres to build a couple million feet is beyond comprehension.
Yeah.
I think that they're going to build sister buildings for suppliers and related companies or companies that feed off or into Haas. And I was told on one of David's panels yesterday that they're still working on drawings and they're due to break ground sometime 2022. Don't quite know, but it takes 2 years to design and build a building either. But I think in the end, it'll be a very positive move for the city of Henderson as well as the state, especially if they're able to attract more of what they call advanced manufacturing companies. Again, anything we can pull away from gaming, tourism, convention. I was speaking with Doug Roberts yesterday at Panettone. He said, could you imagine if this event would have occurred 15 years ago when we were so much less diversified? Some people would say we're not an overly diversified economy right now, and I would agree with that, but we're a heck of a lot more diversified than we were 15 years ago.
Agreed. Absolutely.
Reliant on gaming and tourism. So I think if more groups like that come, big and small and in between, every little company like that not only helps higher paying jobs and more jobs, but it also increases the likelihood of the next company making that move from whatever state they're coming from.
It was interesting in yesterday's, and one of David's sessions yesterday with Dr. Victor Kalanog, who's the head of the commercial real estate economics for Moody's Analytics, just to qualify where the stat is coming from. But he has a statistic that says it takes 3 times the warehouse requirement for a brick and mortar retailer to support online sales. And we know what's happening, right? So even the brick and mortars trying to survive out there, converting to online sales, need 3 times the warehouse space that they've been using. Then you've got Mayor John Lee of North Las Vegas saying that he is on track for his goal of 100 million square feet. 100 million square feet in industrial space he feels is attainable and well on target for the plan he put in place. And he believes that the next 5 years are going to be the biggest growth that we've ever seen in Southern Nevada, despite COVID. So these are all very positive and great, strong statements, which I want to share because these are other people that have these visions and have this information and relationships with businesses that want to be here. And, and so I think it's important to share that. Anybody else got anything to add to that?
The only thing I would add with regard to the city of North Las Vegas, I think it's fair to say they got hit harder than any municipality in Southern Nevada in the GFC. It was bad. So we decided to take a very proactive approach in the early stages of recovery and put a number of procedures in place where they thought they could be successful in attracting new development. So one of the things is a self-certification program where you can buy or buy an unentitled piece of land and entitle it. It has to be entitled, it has to be zoned. Improvement plans have to be completed, but you can get a building permit in well under 3 weeks.
Wow.
Compare that to the city of Henderson, or especially the county, where we're somewhere around 5 to 11 months right now. So why these other municipalities didn't put systems like that in place is beyond me. And I know for a fact a number of those large fulfillment centers up north, one of the main reasons they selected that area is because of speed to market, how quick they could get that building built and occupied. And I do have to commend Mayor Lee as well as the whole city of North Las Vegas for putting a lot of stuff like that in place. Even the city of Henderson right now for permits, the 321 system, that's still 6 weeks to get a TI permit. And you're still talking another 2 months to build it. So we're 3.5, 4 months to get a TI done. And this could be 900 square feet of office with a couple restrooms. So to me, that stuff just shouldn't be happening in this day and age with technology and the skill sets that most of these trades are equipped with. We should be able to TI buildings very quickly. I understand flood mitigation, traffic mitigation, all that stuff, that takes time because that can't be done wrong. But when you're talking about building a building in the approval process, if the developer does it wrong, he's going to have to fix it. So the risk is really on the developer, not the municipality. So just want to give kudos to the city of North Las Vegas for making that kind of stuff happen.
Yes, I agree. I've got, in our pre-panel discussion, I was talking about a new client that I have that built a building out in North Las Vegas, and half of it's been leased to Amazon, and they're actually building a print shop instead of distribution. They're building a print shop in there, and I guess that's where they started, was in the printing business. But it's a 340,000 square foot building, and they're occupying half of it. And the process with North Las Vegas, according to this client that I have, said it was a great process. The difficult was utilities with Nevada Energy, I think, and I think the utilities out there in North Las Vegas are still probably a little bit behind for future development than then, compared to maybe some of the other city municipalities. Okay, how about going back to Tyler for a second? Not to pick on Tyler on the relationship to the Strip, but Michael Parks with CBRE said yesterday, it was I don't know if any of you guys sat through that session about the gaming corridor, the Strip, and the tourism industry and so forth, convention business. It was a rough session to sit through for someone who's been in Las Vegas almost his whole life, and who would never thought that you'd ever go down the Strip and see it closed, let alone what we're going through now. But he made a comment that he doesn't see anything on the Strip getting better anytime soon. And until there's a vaccine, Vegas, the Vegas that we know and love, is not going to be here until there's a vaccine. Tyler, how long, if this thing continues, what do you see as far as the impact to, your type of industrial real estate and the tenants that occupy your space?
I think this diversification is obviously good for Vegas, but I kind of have a contrarian perspective, and I still think that the Strip and any market that we invest in, any market that I'm even aware of, is probably one of, if not the most unique demand generators in any given industrial market. And I think, while I think the city's effort, the counties and the cities and the various municipalities' efforts to broaden their employment base and diversify the businesses that are there is admirable, I also think that the Strip is still Las Vegas. So, especially from an outsider's perspective, you guys live there, so you never go down to the Strip. But anytime I talk to someone and say I'm going to Vegas, everyone's like, "Oh, that's great! You're gonna have a great time." I'm going to go, and I'm going to work, and hopefully I'll have some fun. But I still think the Strip is such a unique demand generator, and I think that I spoke a little bit earlier about the number of tenants that we've lost and what percentage. And I didn't realize this until today when I was going through a Tom analysis. But of that 52,000 square feet of tenants that we lost since April, 100% were in Strip adjacent properties. So call it west of the Strip to kind of southwest. We didn't lose a single tenant in North Las Vegas, and that is shocking to me, given that that North Las Vegas was that resilient, because I feel like some of those guys are at least tangentially related to the Strip. But that 100% of our loss was concentrated in Strip strip-ish properties, kind of southwest central properties. And so, that's telling. And I think, I wasn't able to listen to Michael Park's webinar yesterday, but I share that. I think until the strip returns, that there's going to be pain in, the convention. Dan and I talked a little earlier. I mean, the convention services guys, the guys who are the trade show guys. I mean, that business is shut up. I mean, it's not like a business that can go from I'm making 100% of revenues and my revenues get cut to 70%. You're making 100% of revenues and your revenues get cut to zero. So like we had a guy who creates craft beer festivals that his busy seasons, April and like June and October, all canceled. So there's no ability for some of these businesses that are directly related to the strip to generate revenue. We have upholsterers that make stuff for the restaurants. I mean, I don't know all of them off the top of my head, but there's so many businesses, especially in our product type, small businesses that are doing business either with the hotels or with the convention services or with attractions on the strip, or the guys that rent exotic cars. There are guys that rent Lamborghinis and Ferraris, but his margins were huge. His business has been cut in to 25 or 30%, and so I just feel like until there's clarity, and whether that's in the form of a vaccine or whether that's herd immunity where enough people get it where people lose it. I mean, I had the pleasure of having the coronavirus, getting it in Las Vegas, and for me it was like a cold that lasted 2 weeks. And so hopefully that's most people's experience, and this kind of the hysteria that continues to accompany us, particularly in my state, the great state of California, where hysteria rules. I think until that goes away, or until there's a vaccine, the strip is going to be negatively impacted, and it's probably not going to return to any semblance of normalcy in the near term. And that's going to have a trickle-down effect on the industrial tenants that support the strip, particularly those that are adjacent to the strip that kind of need to be coming and going.
Yeah, it's interesting when we talk about industrial real estate in the different sectors, and how some can be absolutely thriving, and then the ones that are still considered industrial, the smaller units that serve the strip and the heartbeat of Las Vegas. Same thing in my portfolio, the management portfolio that I have, the same thing. The tenants that are struggling in industrial real estate are the tenants that have supported convention business, the strip, hotel, casinos, and entertainment. A lot of the entertainment has just totally come to, there's no entertainment anymore. You can't go anywhere. All that's shut down. So, Tom, how are your projects that you're involved in with Uncommons and the industrial projects that you have? How do you feel that the strip is going to impact your developments?
Since it's on the industrial panel, I won't go on the Uncommons tangent, but I will tell you that really we only have one project in the Southwest, and it was pretty much sold out before the pandemic hit. So I'm not that exposed to it. We were pretty happy to get a large convention services company's lease signed, right when the pandemic began. But, we ended up giving them a bunch of free rent to kind of get through what we thought the pandemic period was, which probably won't be enough. But then at the end of the free rent period, it's a 10-year lease. And this is an international company. So I do think, to Tyler's point earlier, the bigger the company, the smaller the speed bump over a longer period of time this pandemic is. And fortunately, our companies have been those types. Granted, we have restaurants and even food and beverage amenities in our industrial parks. We had a couple of coffee shops and things that won't call me back. So we have been affected at some point, but pretty happy to at least get that one done, and hopefully it continues with some momentum.
Dan, what do you think the strip, as far as overall the industrial market in Southern Nevada, and what's going on with the strip, since we're talking about that right now, and tourism and convention? I mean, it's kind of getting redundant, but I just wanted to get your feedback on it as well.
It's a huge unknown right now. We know that there's a lot of defaults out there in convention-related companies. Some people say there is a positive component then to that, where you will have fewer, stronger companies remaining when things start getting back to normal. Of course, that's not the case if you're one of the convention companies that's defaulting on a lease. So there's just an enormous, I had an equity company out of New York call me today. They're actually underwriting a new development in North Las Vegas. And they asked my prediction for rent growth. And rarely do I say this anymore, not because I'm smarter than anybody, but just you talk to so many people on a daily basis. I said, I don't know what rents are going to be 12 because I don't know how long this virus is going to be in the current state it is. I don't know how long it's going to be until we find a vaccine. I don't know how long it's going to be before any cities reach herd immunity. And I don't know if Vegas is going to continue to spike and start to match some of these other states like California and Arizona and Atlanta and some of these cities and states that are seeing pretty tremendous spiking right now. So the Strip is without question the engine of Las Vegas. So no matter how much I'll talk about diversification, Tyler is absolutely right. We got to figure out a situation where we can get that thing back to some semblance of normal again, not just with the number of properties open, which I'm not so concerned about because most of them are open. It's really the density that we're not able to achieve, whether by demand or by nature of the regulations in place. Some of the restaurants you go in, 40, 50 tables, you'll see half a dozen tables occupied at 12:30 on a Wednesday. I mean, those operations can't continue very long. And it's probably what gives me the most fear is here in Houston, Gordon Biersch had 6 tables full yesterday when I went there for lunch. That's usually packed if you get there at noon. You got to wait for a table. So I think part of it's going to be practice. A lot of people simply don't want to go into a restaurant right now and eat. So that's all fear-based. And hopefully the way this thing evolves, not knowing vaccines or anything of that nature, is people just get more comfortable with the possibility of getting sick. I mean, because at some point we all have to start going back to restaurants and filling up these operations and spending money on the stuff we used to spend money on. So I do have a fair amount of fear of what's happening behind the scenes with regard to defaults and the artificial lift that has been created by the federal government, which I think was absolutely necessary. All that stuff has to come to an end at some point, right? Unemployment, $600 a week stops in the near term. Does that get extended again? Do PPE loans start up again? All of this stuff has to stop at some point. You can't continue to add to the federal deficit. And then what are we left with? Even if we have really bad events with regard to retail and even some office properties, it all has to get solved eventually. There's lenders on all these properties. So there's no way industrial is going to escape unscathed as the darling child, because if everything takes a big hit, industrial, while it might be less of a hit, it's still going to take a hit.
No, I think that that is really well said, Dan, and a lot of what you're saying obviously doesn't just impact industrial. Everything you're talking about is impacting all the real estate in Las Vegas, and I did want, though, to talk a little bit. I wanted to ask you a question on how do you see the current industrial market as it relates to investment sales from buyers and sellers, their perspective. And I know there's a lot of probably money waiting. Oh, I'm gonna waiting for the blood in the water sort of thing. But what are you seeing there? I know we talked that leasing transactions are still pretty steady and haven't seen too much of a dip there. We're all very pleased about that. Tyler mentioned that he hasn't seen anything as far as transaction goes, maybe one that he was involved with or saw. And what's your view on buyers and sellers in the Southern Nevada market to industrial?
So unlike the virus and the vaccines and all the stuff that takes a long time to unroll and figure out, the relationship between buyers and sellers is pretty much like the stock market. It's instantaneous. So as soon as this virus hit, I witnessed a dramatic separation between sellers and buyers. You had sellers standing there with a property in escrow saying, what do you mean you're not going to close? I still have all my tenants on the rent roll. They're still paying rent because nobody had stopped paying rent yet. And the buyer's saying, look, I know I have a big earnest money deposit up, but I'm walking from it because I don't have clarity on what the future is going to look like. I don't know how many tenants are going to be in business 6, 12, 18 months from now. So I'm not going to close the deal. So there's been a big separation between sellers and buyers.
And then financing, right? There was a financing issue. You and I talked about that fell out of escrow because of financing, right?
Yeah, it wasn't just the will of the buyers, but a lot of loans that weren't committed disappeared. A lot of equity partners on a lot of development sites we had under contract decided they didn't want to move forward. So that's probably the area that's been hit the hardest is the capital market side. And until we get some clarity, which means one of two things. We see a reset in pricing so that groups like Tyler's will come out of the woods and start buying again, or we have some clarity on the situation of the industrial market with regard to occupancies and potential rent growth or lack thereof. Or it doesn't necessarily matter so much what happens. It just matters that we know what's going to happen. That's when the buyers will start to move again.
Yeah, I think, Frank, I think right after COVID hit, there were two trades that happened. One was Lakey buying the Hughes Airport Center, and BKM sold a portion of another product they had down in the airport area. And both of those had retrades, somewhere in the 5 to 8% range. And, I would probably make the argument that potentially the buyers overpaid, at least in the near term, for those assets at that type of, and to the best of my knowledge, at least the stuff that we look at, there hasn't really been anything that's traded since then. Or if there is, I'm in the dark, and we usually have pretty good insight into that. And so I do think there's still a meaningful spread, and I think that spread between buyers and sellers doesn't get narrow unless there's price discovery on what rents and vacancy looks like, unless the capital markets loosen up, or if you get sellers that have meaningful vacancy without the liquidity to backfill that vacancy. And maybe some of those projects that were kind of on the margin already when things were good, this sort of pushes them over the edge. And so we're in the process of raising a private, relatively small $50 million fund in anticipation of hoping that we'll see some of those opportunities. And we're actually, ironically, we've probably been more active in Vegas than any other market that we're in over the last, 4 or 5 years, certainly in the number of transactions. But we're not seeing anything. We're underwriting and engaged in counteroffer in a project up in Seattle. We're underwriting and engaged, not quite the offer stage, but we're going to make an offer on another project in San Diego. And so, we are starting to see neither one of those necessarily is COVID restrained. One of them is an end of fund life issue that the seller has to sell. The other one's, death of a patriarch. So kind of the classic stories of why sometimes these properties change hands. But, normally we're always looking at something in Vegas, and with one exception since this started, I haven't got a call from any brokers. I've reached out to all of our broker friends and saying, what are you seeing? And everyone's, I think, kind of on the same page that, we don't know. We haven't seen, sellers that have to sell yet. And so I think until you see sellers that are compelled to sell for whatever reason, whether that's lack of liquidity, whether it's low maturity, whether it's, death of a patriarch or a matriarch that happens, whether it's lenders, pushing, and pushing for a remargin of a loan that the seller's not able to handle. I think there's going to be a reasonably long period of time before you see velocity pick back up, at least in our product.
Yeah, and I have a personal. We had a project that we were selling that the buyer walked away from $1 million deposit. So Now, granted, it was a big project, so from a magnitude, it wasn't a lot of money, but that was something. And their deployment of that capital was going to be in distressed opportunities. I mean, that's what everybody started doing when this pandemic hit. They started filling the coffers for distressed funds, or really looking for broken projects, really that they could get a better return than what they were going to be buying with us, including ourselves. We had a couple of sites, and still do, in our land sites, in our sites. Pre-pandemic, we were planning on purchasing and starting to build, and right now we're in this frozen state because the financing's frozen. So as I'm talking to the brokers about the sites, they're saying, hey, we could probably get you a small discount on the land of 5 to 10% or something, but we really want you to stick to the timing. And I told them, unfortunately, that's the wrong answer, because without time, I can't close, because I need the financing to thaw. And so then that's equity as well. I mean, equity doesn't know where to go right now. So getting anyone to commit on a development project right now is very difficult. And sellers need to know that and provide time, because it's trying to get 50 cents a foot off the land isn't going to kill the project. But I'm not going to spend 250 grand in due diligence and hard money and then not be able to finance it. It's just not going to happen. And so sellers and sellers brokers need to understand time and flexibility and trust is going to be important if you're going to transact in the next short period of time.
Thanks, Tom. Thank you all three of you guys, gentlemen. I respect you highly. Thank you very much for your time and answering the questions candidly. I appreciate that.